Hi, everyone. My name is Maggie Thompson with SMArtX Advisory Solutions. And today I'm joined with Cameron Dawson and Michelangelo Dooley from NewEdge Wealth. And we're going to talk through the NewEdge products and how they're on the SMArtX platform and a little bit about the firm. But turn it over to Cameron to do a little intro about herself and NewEdge.
Well, wonderful. Thank you, Maggie. My name is Cameron Dawson. I'm the Chief Investment Officer of NewEdge Wealth. NewEdge Wealth is a $20 billion RIA focused on ultra high net worth and high net worth investors, as well as institutions and family offices. We also have a part of NewEdge Wealth is NewEdge Investment Solutions, which is what is on the SMArtX platform. And I think it's a really interesting discussion about the origin of why we built NewEdge Investment Solutions. Overall, NewEdge Wealth is a purpose-built platform, as I mentioned, specifically for ultra high net worth and high net worth investors. And as we looked around the landscape, as we were trying to solve for different parts of client portfolios, what we found is that there were a lot of products out there that were not built for the ultra high net worth investor, meaning that they were very tax inefficient, they were fee inefficient, they were liquidity inefficient, and they weren't allowing us to accomplish the goals of being able to build really fulsome, well-rounded portfolios for our clients, given the constraints of what an individual high tax paying investor is. So what that set us out to do is very specifically build certain products within our portfolio construction aspect that allowed us to solve for those things. And Michelangelo will spend a little bit of time talking specifically about what is on the SMArtX platform, but it's a great example of saying that as we're thinking about things like portfolio construction, one of the things that we were trying to be able to build or solve for was a steady part of a portfolio that could take advantage when volatility spiked within equity markets, that would provide a steady, stable return through cycles, but didn't have the kind of tax inefficiency and fee inefficiency that we saw with most hedge funds that were also targeting that same kind of return stream. So that led to the building of these structured note volatility strategies that are managed in a very unique and different way. As I mentioned, Michelangelo will talk about what makes them so unique and different. But the way to think about NewEdge Investment Solutions is really these point solutions in areas where there aren't products that are built specifically for that high tax paying wealth client, individual investor, that really allow us to, again, build that fulsome portfolio and target certain kinds of return streams given the constraints of our kind of investor. So with that, I'll turn it over to you, Michelangelo, to give them the details.
I don't think I can top that, but I'll try. So Michelangelo Dooley, I am the portfolio manager for the NewEdge Structured Note Strategies team. We are the management team for the NewEdge SNIP and NewEdge SNAP strategies, Structured Note Advisory Portfolio, Structured Note Income Portfolio. These are both discretionarily managed structured note SMAs, where NewEdge is taking over control of implementation, management, oversight, and reinvestment of structured note positions on behalf of our investors. Now, I have experience formerly as a financial advisor. I consulted with high net worth and ultra high net worth investors as a core part of my practice for a very long time. And structured notes were a key piece of what we would integrate into these portfolios. Because of the challenges that Cameron mentioned earlier around hedge funds, we wanted something that we could control the outcomes on. Structured notes happen to be an asset class that allowed us to do that in a more tax efficient, more transparent, more liquid way. And so that was the origination of the SNAP strategy nearly 7 to 8 years ago today, right? We've since been running this and expanded it into an institutional, professionally managed strategy, and that is where we are today. NewEdge Investment Solutions gives us the infrastructure, the support, and the resources to be able to manage this and have more capabilities beyond myself that are there to make sure that we're getting the best outcomes for our investors, right?
Thanks, Michelangelo, and thanks, Cameron. So with the SNIP and SNAP products on SMArtX, do you have any recommendations for the best practices for advisors looking to incorporate those strategies into their broader investment portfolios?
I'll start, and I think Cameron can speak to broader portfolios, but I'll say that from a structured note standpoint, the objective of the strategy, I think that's an important place to start, is what is our objective? And from there, you can figure out where this fits into broader allocations. The objective of both the SNIP and the SNAP strategy is to take away the reliance on equities, but to still be able to generate what we would consider to be equity-like returns. We're targeting high single-digit to very low double-digit type of returns within this strategy. But again, we do not want to have to rely on equities to generate double-digit returns in order to achieve that. So this is going to give your portfolio and your clients a piece of the allocation that is less reliant on the equities and also going to be uncorrelated to some extent with many of these kind of broad market factors. That's important, especially as we enter into environments like we are today, where equity returns can be challenged. Having a piece of the allocation that doesn't rely on this can be a very, very big thing for clients to keep them invested, keep them calm, and make sure they're still generating their portfolio financial goal targets, right?
I think that last point from Michelangelo about keeping investors calm is really important. What we find is that because of the way this portfolio is structured and the way that the trading is approached, is that this Michelangelo, as the portfolio manager, will go and place trades and be active on days that volatility spikes, when fear spikes, when investors get scared. But what we find is that our clients that own SNIP and SNAP, knowing that we're able to take advantage of that volatility, their approach to volatility starts to change. They see volatility, instead of as this big risk to run away from, as an opportunity to take advantage of. And that helps train clients to be able to be having a much more steady hand, mostly in times of uncertainty and highly volatile markets. So it's a great almost training tool in some ways to keep clients in that advantageous view of volatility, at the same time as providing that ballast within a portfolio of a steady and stable return that again has those characteristics about being more tax efficient. Within the SNAP strategy, it's primarily long-term capital gains versus current income, which is very different than a hedge fund, which will generate a lot of short-term gains, even though in years sometimes you don't have great returns. Fee advantage, of course, you've probably seen headlines about the added fees of pass-throughs on the hedge fund side of things that can make the returns much less attractive on an after-fee basis. Liquidity being very different than hedge funds. A lot of hedge funds have moved to lock up capital even longer than they did before, making it even harder for you to get money back. And then lastly, the transparency being so very different, of knowing what is actually in your portfolio versus this black box. And so when you put all those things together, again, it's this idea of accomplishing something that's purpose built for that ultra high net worth, tax sensitive kind of client.
I want to mention the one thing, because I think that's the whole story. This is the gist of what we do in the strategy. And this is why I think we differ a lot from traditional strategies you might see offered by broader asset managers. This is a alpha generator in portfolios. It has performed well. That is historical numbers. That's fine. But the important piece about this is shifting an advisor's point of view, again, to focus on opportunity in the markets, to focus on periods where they might otherwise be afraid and use that to their advantage. We understand that in order to do that, we have to be partners to the advisors. We want to provide you with the information that you're going to need to be able to share terms of these structure notes, to know when we're executing these notes so that you can communicate that detail to your client at the right time. That's our whole job, right? That background that I mentioned, having and being an advisor in the past, the best asset managers were the ones that really supported our practice. And so we know that that's a centerpiece of what we do, is supporting your practice so that you can be in front of your investors with the right information at the right time.
We think it's very important in general that as advisors, that as clients, that clients know what they own and why they own it. And the way that you accomplish that is having transparency, so an advisor can go into an investment meeting with a client armed with the details needed in order to explain the drivers of performance, instead of having to do a shoulder shrug saying, I'm not sure why something underperformed or outperformed during this time. So that's our what we think is a really key differentiator, because we're coming at this as advisors as well as trying to solve these same problems for our own clients.
No, thank you both so much. And especially with the time and kind of the market. I mean, it really resonates with advisors and who are looking to allocate on SMArtX, and especially if they're new in kind of the model space or looking to make a change, this is really informative for them. And to find the NewEdge products, SNIP and SNAP, they are available now on the SMArtX platform. So advisors can research them more there about more about the products and then also about the firm itself. So really resourceful. And thank you both so much for talking through that today. Yeah, I appreciate it.
Happy to be here.
Thank you.
All right.